and welcome to our webinar on Ready to Take Off, Raising Impact Investment. And for those, the alumni that are out there, and for those that are not from the alumni network, I'm Luisa Ferreira and head of the social program at European Investment Bank Institute, and I will be your host for today's webinar. We thought that, this is the first of a series of webinars that we are organizing for the Social Innovation Tournament alumni, and our partner is University of Luxembourg, and we were having this first webinar in a beautiful studio at University in Belval, Luxembourg. Unfortunately, as you all know, the circumstances have changed. We are all teleworking, so we decided not to postpone it, and test technology might not be perfect from a technology standpoint, but what matters is contents, and so I'm really happy that we can make it happen. So we'll be joined by Laura Catana from FASE, the financing agency for social entrepreneurship, and later on by Martin Wesian, which is the founder and CTO of Helioz, an SIT alumni. In 2015, Helioz joined the SIT alumni network. So I leave now the floor to Laura, and maybe you'll get to see me later on if the technology works. So thank you all for joining us today.
Perfect. Thank you so much, Luisa, for the introduction. It's really a pleasure for me to be today with you. I hope you're all comfortable in your homes, that you have water and coffee and lots of questions to ask, because I'd love to have this session as interactive as possible. So just a recap of the aim of this session, we are trying just to get an understanding of what it takes to raise investment. For this, we're gonna use the experience that we have at FASE, the financing agency for social entrepreneurship, and also the experience that Martin has accumulated over the past years. He has multiple experience in raising investment, impact investment. So I'm really thrilled to have him with us today. Maybe a few words about myself. I'm the European Investor Relations Manager at FASE since last year. Before, I used to work with Ashoka, one of the largest enterprise support enterprises for social entrepreneurship in the world. What we do at FASE specifically is that we try to build bridges between social entrepreneurs and investors. The aim is to support social ventures to scale up their proven business models and impact models as well, and basically scale the impact that they have on the world, either the environment or populations with different needs. So specifically, in a nutshell, FASE has started operating in 2013 as an initiative of Ashoka Germany, and we're trying to really bridge this gap between startup and the growth phase for social ventures. We have worked already with more than 50 social entrepreneurs, helping them raise more than 25 million euros over the past years. And what we do is that we really partner with the entrepreneurs. So they become our clients, we are on their side, and our aim is to help them prepare for the investment round, but also to help them manage the round. So essentially, we want to unburden them by using our expertise and our knowledge and contacts in the impact investing world in Europe. We try to help them to focus really on the impact models that they have developed and on their business models, and not spend too much time trying to figure out the impact investing ecosystem. That's why we're there for them. So this is how we also developed a network of more than 1,000 European impact investors, and we also got recognition from different fora and bodies in the European Union. Actually, myself and the founder of FASE, Markus Freiburg, have also been active members of the European Commission expert group on social entrepreneurship called GECES, and we're also part of EVPA, the European Venture Philanthropy Association, and many other bodies. We also receive support from the EU because we have been among the first ones in Europe to really pilot these hybrid financing models that I'm going to talk more about today. Going more in depth, we are really focusing on this, what we call the early stage financing gap. So we're really looking at supporting entrepreneurs who have a finance need that is too large for philanthropists and philanthropic capital, and too small and maybe also too risky for institutional social investors. So usually this is a gap that can go somewhere like below 500,000. What we see is as well that in Western Europe, this might grow a bit more and go almost around 1 million. It still remains the financing gap for social entrepreneurs. And what we see here is that this kind of entrepreneurs, they really need a combination of philanthropic capital with impact first investments, or what we call hybrid financing. So if we look in specific what kind of gap they have and how they don't fit into these two traditional types of funding, the non-profit on one hand and the for-profit on the other hand, what we see is that on the non-profit side, obviously you all know the shortcomings, the fact that they are not always reliable, they are very restricted and short-term. On the for-profit side, obviously there is the repayable component that also investors require market rate returns. So what we realize social entrepreneurs need is this kind of hybrid solution. There is not one solution. It's very important to know that social entrepreneurs really need tailored solutions for their own specific cases. But what we know for sure is that it's in between, it's sitting in between two different chairs, where they need financing with much more modest returns, and also that have create some potential exit options for the investors. So what we're trying to do is we try to demystify this idea that social venture that is not able to cover its cost will not be profitable, will only be able to attract non-repayable funding, so grants, donations, and stuff like that. What we're trying to say is that if we are able to structure the enterprise or the activities in a way that we can disentangle, we can separate the economic activity from the classic non-profit activity, we could potentially create an intelligent combination for leverage, and therefore an opportunity for the social entrepreneur to be supported both by grants and donation for the philanthropic activity and repayable financing for the economic activity. So one of the questions that some of you had, and I know it's the sort of first step in the investment impact investment journey, is how do I know if I'm investment ready? There is a toolkit that we often encourage our social entrepreneurs to use, was designed by the Social Finance Academy. You can find it on the internet. You also have the website here, and we're gonna be able to provide the slides after that, after the session. But essentially it's a checklist, it's like a survey, you fill it out and it helps you to understand which are the areas that would require more work in order to become investment ready. So this is a very easy tool. Another tool that I wanted to share with you is this one. I don't know if you see it much. It's called Social Investment Toolkit. It's developed by Mark Cheng from Ashoka, our partner as well. And it has 8 steps that he suggests, and we also suggest as well, in helping social entrepreneurs develop their investment readiness and get ready for conversations with investors. This toolkit is available online. You can just Google Social Investment Toolkit. You can also find it on Amazon if you want a printed copy. And why I like it is because it doesn't offer only guidance, it offers templates, and it offers lots of examples for each of the 8 steps. So let's go now a bit through the steps. There are 8 steps, and they are separated or organized in groups of 2. So the first part focuses on what is the theory of change? How do you create impact? Yeah, and also how do you measure impact? So starting from the problem to the solution through which you're trying to solve the problem, and to the impact measurement. This is the first section. The second part is the business model. Specifically, who is your customer? What is your pricing? You know, what is your strategy to reach the customer, and so on. But also, how do you actually, you know, scale? And here is very important to distinguish between scaling the model itself from scaling the impact. How do you scale the impact in such a way that you are able to reach more people and to solve more of that problem, right? So this is what investors usually want to see. The next section focuses on the structuring of the business, the financial model. So essentially how you are planning to make money, and also how did you create your assumptions, but also the legal structure. And here it's not only the legal entity, but also the team, for example. So how do you create your organizational chart? How do you manage your team and your partners? You know, you might work with collaborators and so on. The final part, which is closely linked to the sort of reaching out to the investors as well, the investment round, it's the financing ask. Here, there are two elements, the financing terms and the investment pitch. The terms really refer to essentially how much are you asking, what for, under what conditions you're able to give maybe potentially part of your enterprise or to accept debt, and many other questions that refer to the relationship with your investors. The investment pitch is a series of documents. We're going to talk a bit more about it later on. So I'm going to stop here, and I'd like to focus more on the financing terms. So how much should you raise? Why is this important? Why is this such a critical question? It's because you need to think of the financing round as an iterative process. It's a series of milestones. You should not think of the financing round as a one-off thing. It will always be followed by multiple other rounds. So you need to have this in your mind. Why? Because raising money actually has a cost. If we're not talking about grants, we're talking about repayable finance, which comes with a cost, either the cost of losing parts of your enterprise and giving it to an investor in exchange for capital, so that's equity, or whether it's debt, in which case you will repay it back with some interest rate. So it's very important to think how much money do you need just until your next milestone. Why is that as well? Because once you reach your next milestone, you will probably be able to get more capital under better terms, better conditions. So it's very important to think of the steps in your financing journey as an enterprise, and also to think of what is your cash burn rate. So essentially, how quickly you will be spending the money, the capital that you are getting before you're able to generate cash flow from your operations, and essentially be able also to pay back. The other part is what kind of financing should you raise, and this is essentially our core knowledge as well. So as we discussed, social entrepreneurs often don't fit into the two categories. That's why they often go for hybrid financing. So the structuring of the instruments that you might need or might best fit your case, it's super important. And not so many people have very good understanding, because also social impact investing is such a new field. So it's very important to give it the right amount of attention and also get the necessary support maybe from experts and professionals who have experience in this. And finally, what kind of terms should you offer to your investors? So this depends on your preferences, but also it should be an analysis on, again, the long-term plan for your enterprise and what makes sense specifically for your business case. So let's say that you are an enterprise that it's quite new and therefore doesn't have stable or predictable cash flow. And also, that means that it's quite risky and has a high potential growth, growth potential. So in a case like this, you could potentially go for equity. But what if you are high risk, early stage, but also you have slow growth and you have quite volatile cash flow? In such a case, it wouldn't work equity, but debt wouldn't work either, because for you to get debt, you would probably need to have a more mature stage of development with predictable and stable cash flow. So you are really in between, and that this in between space is what often it's called hybrid finance, or it can also be mezzanine capital, which really tries to take different features of equity and debt and try to adapt them to the specific case of the enterprise. It's super important that you, as I said, take enough time to actually understand what makes sense for your specific case. This is why we're not going to go too much in details, because there is not a one-size-fits-all instrument for social entrepreneurs. It's really dependent on your own situation and needs. And we're going to have some examples anyway later on. If you're trying to figure out what kind of instrument might fit for you, there are some also checklists. One of them, and this is a sort of adaptation of the one that you can find in the social investment toolkit that I mentioned before. So for example, if you are a new enterprise that has launched with quite a good growth potential, right? You would be somewhere here. You might potentially get a convertible loan, which is a loan that has features that might be very interesting for a social entrepreneur. So it's a form of debt, but it could be converted to an equity instrument. So let's imagine that your enterprise has very good, financial situation. And in such a case, an investor might prefer to transform it into equity because it would create more opportunities for better returns for the investor. On the other hand, if your enterprise is not doing very well and you might want to just get rid of the loan, of the debt, you might want to convert it yourself as the social entrepreneur into equity so that you can basically move, and share the risk with the investor. So there are advantages, but obviously this kind of instruments need to be very carefully designed and also negotiated with the investors, right? So again, very important to take the necessary support from experts when designing this kind of instruments. So a few words about the investment process. This is an example of an investment process that actually is very similar to any investment process, not necessarily for impact investing, right? So assuming that you already have all the materials ready to reach out to the investors, what happens is that you will need to map the investors. And here it's super important that you think of what kind of investors you might appreciate having alongside you and thinking long-term again, yeah? So would you prefer to have, also depending on the stage of your enterprise, would it be more of a business angel or an impact fund? Would they be involved with you? Do you require or do you need, would you appreciate their support and expertise or rather not? Also, it's very important that you have a very good understanding of their investment preferences. So are they really investing in your sector? Are they really investing in your area, in your region? Otherwise, don't just send emails to people because they really don't appreciate that. Try to really tailor your research to the investors that make sense, right? And go for quality rather than quantity. What we do is that the next step is you approach them. And this is also something that we as FASE do. So these first steps, we are always in the lead when we work with entrepreneurs. We approach them usually with a teaser or just a 2-pager telling them in a nutshell what is your impact investment opportunity about. And then those that are interested reach out and we organize a pitch or a management presentation so that they can get to know the team. So what's very important for us as FASE is that the entrepreneur is unburdened by this investment round. So they only join the conversation when there is an investor that is clearly interested to know more and considering an investment opportunity. So I think, Martin, if you can mute yourself, please.
Yes.
The next step is that the investor will follow up or we will follow up just with more information, the full business deck. And at that point, they might express interest. If they do so, they will start the due diligence process. And at that point, we will probably share with them access to a data room where the social entrepreneur will put any kind of information necessary, including contracts that your enterprise might have, so that the investor can do their own due diligence. Also, maybe in parallel or immediately after, usually it's in parallel, we start the negotiation of the terms. So this is also where you discuss the contracts, the shareholder agreements, you discuss the terms of your specific instruments and so on, and then you start documenting it in the agreements. And last but not least, the most important and much awaited part, the financial closure, when you finally sign and hopefully have your capital in the bank and you can start using it. This process, as you can see, can last somewhere in between, let's say, 6 to 9 months. We cannot really give a specific answer, like number of months, for different reasons. But most important reason is because you cannot predict the time that an investor needs to take a decision. It also depends on the type of investor. If it's an impact fund that has specific investment committees that are already scheduled in the year and they need to go through a process, then probably it will take longer than if it's a business angel or a family that just takes the decision, from one day to another. So think about this as well when you think of the type of investors that you're looking for. So here, specifically what FASE does and how we support the entrepreneurs is that we really try to help the social entrepreneur in the preparation phase as well, in reviewing the business plan and in designing the instruments as well. We're also working on the preparation of the two-pager with them, and we do all the investors mapping approach, as well as coordinating their due diligence and coordinating the negotiations, advising the entrepreneur during the negotiation phase, and trying to really syndicate and align the investors, bring this type of investors that might be very different together and try to align them around the objective of the enterprise and how do we make that social enterprise as successful as possible in terms of impact as well as business model. And last but not least, we do take very seriously this mission of ours to provide blueprints for the sector so that more social entrepreneurs will be able to do this in the future without much support, because ideally there will be an ecosystem that will self-organize itself, right? Some of you also asked about how do I choose the investors and what is their motivations, how do they take decisions? I think for us, if we are to simplify as much as we can, it really depends whether the investors are managing their own money or whether they manage other people's money. Also, their impact motivation might be related to this. If it's a social business angel or a family office that manages obviously their own money, and they might be able to decide differently more quickly, but also put more focus on the impact. There are nevertheless social venture funds that are very intentional about the impact, so don't get scared about that. But just saying that it's very important to when you do your investors research, to think how these people take decisions and whether they manage their money or other people's money. So in few words, just before wrapping up and going to the conversation with Martin, the social enterprises we work with, because some of you asked, we work with enterprises that have already validated both their impact model and their business model. So that means that they have some commercial revenues already and they have a break-even expectation in like 2, 3, maybe 4 years. They might be needing financing of between 250,000, sorry, that's not million, it's 0.25 million. So 250,000 euro up to maybe 5 million. And very important that they are really looking forward to an expansion plan. So we very rarely work with enterprises that are very local in a very small region. We work with entrepreneurs that are trying to scale their impact in other regions as well, and they can work in any sector, in any SDG. So we're sector agnostic from this point of view. It can be environment, it can be healthcare, education, whatever. So finally, 2 examples. One is Discovering Hands, an entrepreneur that we've worked with, I think twice already, a few years ago, and he is also an SIT alumni. What Frank Hoffman tries to do is to tackle the issue of breast cancer diagnostic. He does that by training and also employing visually impaired women as medical tactile examiners. So what we did is we helped him to also structure his enterprise in 2. On one hand, a non-profit that focuses on the education side for the visually impaired women. On the other hand, a for-profit entity that focuses really on the business model and on selling the licenses and these strips with some braille code that they are using in the diagnostic process. So we helped him to raise capital from 2 institutional investors, and it came also as a hybrid capital, because so mezzanine actually, it was a kind of loan that would start to be repaid. So first of all, it would have a grace period in the beginning when they were starting operations, because obviously in the beginning it's very difficult to start already repaying. And then also the repayment structure was linked to the operative profits. So it means that there was a very close alignment of interest between the entrepreneur and the investor, right? Both of them wanted the enterprise to succeed, which means to have as much impact as possible. And in this case, impact and revenues were connected. So they needed to have more of both in order to be able to repay the investors later. Another example is a very recent one, Healthy Entrepreneurs. Joost van Engen from the Netherlands. We have recently just closed their financing round. What they do is that they focus on providing access to affordable healthcare products in sub-Saharan Africa in very, very remote villages. So they create efficient last mile distribution systems, specifically by training and also engaging local villagers as community healthy entrepreneurs. So they become a sort of, if you want, an ambulant pharmacy, I like to call it, because they go to the village rather than the villagers traveling to go to a pharmacy in one of the, let's say, more urban settings. So we help them to raise capital in excess of 1 million from both institutional and private investors, a combination. And the plan here, the reason why they needed the financing is to reach out, to be able to engage many more community healthy entrepreneurs. So now they have been working with 4,000 such entrepreneurs in Kenya and Uganda, and by 2020 they plan to reach 12,800 such entrepreneurs and be able to reach many million, almost 4 million families with access to their products. These are some samples of enterprises that we have been working with. Important to mention that on our website you can find more information about them as well as case studies. And in particular, if you're thinking of how to structure your enterprise, those case studies could be very, very actually. So take a look. Final tips, and then we move to Martin. Think of yours ready. One pager, financial. So use that you support maybe from lawyers and also from corporate finance advisors, and don't think that you can just copy paste the model from another social entrepreneur. You will really need to have a deal by deal approach. This is our lesson learned. And last but not least, stay flexible. Be able to, embrace any kind of feedback and really reflect whether it makes sense for you, because that might be the way through which you can find the investors that really fit your needs and also your values, and that's crucial. So this is my contact. As I said, we will share the presentation after. Thank you so much for the attention. I would like to now go straight to, I'm gonna stop sharing here, and Martin, if you can please join with the video and with the mic. Fantastic. So Martin, thank you so much for joining. I'd like to start the presentation in a rather unconventional way. So I'd give you some words or sentences, and you will need to tell me which one resonates with you more. Deal?
Yeah, okay.
Okay. So between Greta Thunberg or Boyan Slat from the ocean cleanup?
Greta Thunberg.
Financially sustainable but less impact, or a lot more impact but also financial challenges?
Sadly, the first one.
The first one. So financially sustainable but less impact. I can't wait to start my next investment round, or I am not really eager to start my investment round?
I'm not really eager to start a new investment round.
Fantastic. So let's hear more. Let's start first of all with a quick presentation. I'd like to avoid sharing my own perspective of what you do at Helioz. So please enlighten us. What is it that you do, and yeah, what is the problem that you're trying to solve?
Okay, thank you so much. Hello, dear audience. Laura, thanks for the great introduction. Actually, there is nothing more to add, especially in terms of investment. But I can give you a little bit overview about my company and what we have done so far. We have done 3 investment rounds. For what actually? We divide our work in 2 parts. I would say the geographic parts, so it's the countries in the south.
Martin, sorry, just a second. Sometimes it gets interrupted. So if you can come closer maybe, or just figure out whether there is a microphone issue.
So can you hear me?
Yes.
Better?
Yes.
Great. So we divide our work actually in two parts, geographical parts. So it's in the countries of the south. We do mainly development or implementing projects. We go into villages, even cities, slum areas, and bring people tools so they can and foster their life actually. So it started first of all in the term of water. So we bring access, enable access to clean drinking water. Maybe you are aware about it. Clean drinking water is most of the most crucial parts in the world to foster your life. Especially there are a lot of deaths because of not clean drinking water, especially for children. So it's the most dead body counts in the countries of the south. It started with water, so we bring a tool actually called Vadi. It's a tool we've developed for clean drinking and easy water disinfection. It lasts for about 5 years, 6 years, something like that, and it should be or is actually very, let's say, cheap, inexpensive. So it gives people a tool to disinfect their water without ongoing costs for years. So this is something very crucial, especially because people spend a lot of money just for disinfecting water. For example, in Bangladesh, in one of our projects, people spend around 10 euros a month to disinfect water or gain water. If you earn just 100 or 120 euros, it's a lot of money actually just for water. And the imagine for the whole family, especially for the children who are in
Martin, I need to interrupt you again because the sound is quite bad.
Maybe I give it a try with
perfect.
With
yes, please. That would help.
Second.
Yeah, let's try.
Hopefully this is better. Great.
I think so. Let's try.
Okay. So as I said, it started actually with projects in Africa and Asia and countries of the south with the main topic water. But we broaden our projects. Right now we are doing recycling projects, for example, too. So PET bottle recycling. We focus mainly on women empowerment because clean drinking water is the duty of women in countries in the south. Or we do inclusion projects. So we are looking at the projects and put in some projects that are locally available. They are important for the local people. And therefore we work with local partners, which is very important for us. This is the one part. So it's actually mainly projects in Uganda, for example, in Kenya, in Ethiopia, and in India and in Bangladesh. So far, we have equipped several 100,000 people with our tools so they can gain clean drinking water on a daily basis or do recycling projects or, very important, micro-entrepreneurship. So we taught the people how to gain some money by disinfecting water or by selling our tools. Which is very crucial and very important in the part of recycling as well. So micro-entrepreneurship. This is one part, the part we are doing in our countries in the south with local partners. The other side is the monetization, so how we earn money. Actually, it's two sides. It's CSR, so corporate social responsibility projects. And the second growing thing, and therefore Greta Thunberg, of course, we are selling carbon reduction certificates. How does it work? The disinfection process in the countries of the south is mainly by 80% done by boiling water. So you need kerosene, wood, whatever, to disinfect your water on a daily basis. So you can imagine there are 100 millions of people in lighting a fire every day just to disinfect their water. So we avoid these fires and therefore we can gain some CO2 certificates on a yearly basis and sell it to companies here, mainly in Austria, Germany, and Switzerland. But there are coming up more markets like India. As you know, carbon reduction is a topic for the whole world. These CSR, corporate social responsibility, and CO2 are the main thing we are doing here. But it's actually not only carbon certificates. The companies, for example, they just don't buy just the carbon certificates, they buy kind of communication concept as well. One of our customers, for example, is the grocery chain Aldi, or called Hofer, probably you know it. They are very eager to reduce their carbon footprint, and they do so by installing solar equipment on their rooftops. They reinvent the heats of their ovens and so on, but they can't reduce the CO2 output of their trucks, for example, delivering all the branches. And therefore, they have to reduce it otherwhere, and this is what we give to them. So we've done a project for Aldi in Bangladesh, for example, and they are not actually the people working for Aldi, but they produce products for Aldi in Bangladesh. So Aldi said, we want to take care of these people, and we want to have that they have clean drinking water, development, education, for example, and therefore we built up a local project with about 50,000 families doing clean drinking water, have access to education in the 4th year in a row right now. And Aldi or Hofer in Europe is using that for in their communication, of course. So CO2 certificates and communication. The second part, corporate social responsibility, is more and more merged together with carbon reduction, but mainly in India is CSR a great topic because there is the Companies Act law. So every company has to spend about 2%, not about, you have to spend 2% of its revenue, not revenue, profit for social impact projects. There are just a few topics you can spend as a company your money in. For example, education, there is a Prime Minister's Fund, and one topic is water. So clean drinking water is a main topic in India. And these companies, they have to spend it every year. So actually it's a threat for the company because they have to spend money for things they are not their core business. So we give them some possibilities to spend this money for their employees, for example, for the villages surrounding their plants, for the people they would like to care of, so they can concentrate on their core business, and we spend their money, the 2% of the Companies Act law, wisely. So this is actually our...
Could you maybe tell us a bit as well about your experience in raising capital? Because I know you have already gone through 3 investment rounds. Yeah. And I think it would be interesting to focus maybe on the first and on the last. And in particular, what has changed? Like, what have you changed? What were the lessons learned that you sort of moved from one investment round, which I guess the first one was more like the seed stage, or was it not? I don't know. If you could tell us a bit about the stage of the company and how did you actually move to the third one, and what did you change?
It depends clearly on what stage your company is at the beginning. To be honest, the first investment round is, especially in Austria, is done by the government. So because we have a lot of research to do, so especially in the lab, we needed a lot of money especially for microbiological tests, for UV tests and so on. This is something no investor will invest money on it. So therefore, we received a lot of grants from the government, especially in the first 2 years, which were crucial to develop our device. Otherwise, it would not have been possible to develop the device. So you have to have a look on the grant givers in your country. Mainly in Europe, there are a lot of grant givers, and they're actually really good at it. In Austria, it's, for example, FFG, Forschungsförderungsgesellschaft, and they finance part of it, the crucial start of it. Second, as soon as you are ready with your research or your business case, actually it's something you have to research by yourself as well, what's our business case, then you have to start gain money from investors for production or for business development. And this is mainly done by, as you said, by business angels. So we have had a range of business angels investing in our company. at the beginning, and they are great at the beginning, especially not in terms of money. They are great in terms of tips, tricks, how to build up a company. So choose wisely who you would like to have in your company, because this is like a marriage. So this is really something, or someone who will be in your company, or could be in your company, and bring more valuable input than just money. And this is very crucial, especially if it's your first company you start in. You have to have a clear view of your company, of course, especially when you start discussing with investors. Because one of the questions was, what is the most important thing for investors, and how do they decide? In my opinion, it's pretty the same with social enterprises as well. Of course, a great idea, disrupting company, growth company, is for interest for almost every investor. The social impact is important as well, but finally, the business figures are the crucial part how an investor decides. So you have to give him an overview for gaining income for the next some years. So you have to give him a horizon, otherwise it will be hard to find an investor. And therefore you have to develop your idea with the investors. So in our case, it's mainly, for example, first of all, business angels. They gave us great insights. They gave us network to now customers, for example. But our company growth on. So right now we are more and more international. So therefore, business angels are not able anymore to bring tips, tricks, and how to do it, because we are now bigger than they have done, for example, their business. So we have been looking for big companies which have an impact in our topics, for example, in production, electronic production or plastics production. They have impact in, for example, investing or in sharing money, for example, or giving money. So right now we have more and more looked for big institutional investors, which worked out well. With not that good talks with especially VCs, so venture capitalists. But I think mainly because the scene is growing right now. So there are more and more impact investors coming up. So some years ago, there were no impact investors, just venture capitals. And our business model, which is should be profitable, of course, is not compatible with the growth expectations of venture capital.
You're in the middle, as we were discussing earlier, right? Yeah.
You're in the middle. So it's pretty hard to find the Series A. It's mainly the Series A funding. You will find some business angels, maybe on a later stage, you will find investors as well. Series A is pretty hard in Europe, especially in the center of Europe, as we all know, actually. So this is something just is growing right now. If your idea works and you can show some revenues, I think it's quite easier to gain some international partners. So, for example, in our case, it's a multinational company owning 170 plants all over the world, which is very crucial and important for us. Especially, they deliver a part of we are in need in the local areas. So the transport routes are very close and very short, and they are in a development phase or in a research phase we can participate of. So they bring their product further, which is crucial for us. So we, as a small company which are not able to afford such a kind of research, they take us with us. So this is very important for having a good partner and an international partner who can help you out, especially in research or in business development, which you are not capable of.
So, Martin, I know that you had 2 rounds that you led yourself. Mm-hmm. And then at a certain point, you came to FASE and wanted support for your 3rd round. Could you tell us a bit, why was that? Like, what did you learn in your first experiences that made you, already experienced and nevertheless looking for support?
Yes. actually, it was a wish of mine to have a partner like FASE, and I can give it to just take a partner. So because at the beginning, decide who will take care of the investment and all this part, also all of who will take care of the money and investor relations, because this is a big part of your daily routine at work, or will be a big part of your daily routine at work. So you can imagine about 30% of your 40% of your daily work will be just for the investment round. So you are not able to take care of about your business by yourself. So decide if you will do it as a founder, for example, or someone else will do it. At the first 2 rounds, the investment round, I've done it by myself, which was great, especially because I've learned a lot. So there's an extreme learning curve. Just have a look at the wording. You have used the wording in the investment scene is very concrete. And how to discuss with people, with investors, how to attract them. You have to attract them first, and then and on a second step, you have to give them, of course, the numbers and the figures you try to reach. And as we know, almost no startup is able to receive their expectations or their numbers. So the first and second round I've done by myself, which of course interfered my business development for the company itself. So you have to have partners in your company, which take care of the company and bring it further, and or I would say have an external partner, especially for the investment round. In terms of FASE, why FASE? FASE is very important. We are founded as a social company, a social enterprise, which is crucial for us, which is very important to us. And we were looking for a partner which is not addressing venture capitals. We were looking for a partner who is addressing impact investors, big international players, and of course philanthropic investors as well. So you are not that easy to address philanthropic investors. And this is one part. So the network of FASE was very crucial, and how to reach these people, those people. The second thing is really how to attract them, how to deal with all the networks. So there are a lot of emails and advisement coming in from. So and FASE will help you out with that. So so you can focus a little bit more on your business, just a little bit more than usually. So network is very important. The daily business with the investors, attracting, sending out the presentations, having a data room and all the stuff. So FASE will help you out with that. And most crucial thing actually at the end is the contract. So the contract is that you will sign at the end, and which is fixed for years actually. So you have to be very careful with that. And FASE will help you out with it. You need a lawyer by yourself, of course. You need a lawyer at your side, but FASE will help you, and this is, in my opinion, one of the most important things is a sparring partner. So if you are in discussion with an investor and you're not quite sure, maybe I will give more shares or more money or whatever, you can have a call with FASE and say, look, we have this investor and we are discussing that and that. So it will come some great insights and some tips and tricks how to deal with the investors. And this is, I think, FASE mainly gives enabled it a lot of, or given a little bit spare time for my company. So they overtook a lot of tasks for the investment round.
I'm happy to hear you say that, because that's exactly what we're trying to do indeed. I have a final question, and I think Luisa has already some other questions from the chat. We tried to integrate some of the questions that you guys sent in the registration form. One of them was referred to impact measurement. So we have all heard that storytelling is important, it's great. Investors, however, are looking for hard evidence. And the question was, what metric, what method do I use for impact measurement, right? And our answer at FASE is that, first of all, if you are early stage, impact measurement is usually an ambition. It doesn't mean you shouldn't do it. It's just important for you to know that it's time consuming and resource intensive. So what we usually advise social entrepreneurs when they're early stages, find a partner, usually a university or a third party that can help you to actually think your impact measurement plan in a sense, and also the monitoring and data collection. I know actually that recently Acumen has just launched a new entity for this kind of work. It's called 60 decibels, might be worth checking it out. But as an overall recommendation that we have, and I'm curious what you say about this, is that we cannot say follow this method, because there is no unified approach that any investor, like that all investors would agree with. So what we say is try to think really, and sort of a general approach would be what we call the YOI approach, which is really try at least to define what are the inputs that you're putting in, the outputs, the activities that come out, then the outcomes that are being the effect of your activities, and try to define also the long-term impact. So that's the YOI, the impact, input, output, outcome, and impact. So at least if you have it written down, it helps an investor to understand your theory of change, right? What's your view on this? I mean, you have also a very scientific product. How did you manage this impact measurement question?
Impact measurement is very important for yourself, for your company, for investors, but mainly actually for the people, for the local people. So you have to adapt your business case probably, and you just can adapt it if you know the outcomes, impact, and so on. But as you said, it's very time consuming, very resource consuming, and especially very, very expensive. Mainly or especially in our case, so we have to do impact measurement in the local areas. So we have to have people walking around to every household and ask them questions, which is very time consuming and very, very important. So you're not able to afford this at the beginning, but you need it actually. And some of them will ask you. So how to do your first question, how to do your impact measurement? You have to figure it out by yourself, actually. So what fits on your business case? There are a lot of literature and partners out there who can help you out with that. I think it's very important, as you said, to have a partner on a very early stage from universities, maybe just students, not just, but students are very important. They are eager to do a bachelor or a master degree. So they can help you out, and they did in our case. So they are very important, so they can learn by themselves how to impact measurement, how to do that. You can finance, for example, a trip to Uganda. They are eager to see, they are interested to see. So this is a very basic impact measurement, so you can give some figures to the investors and your customers as well. But you have, of course, to say how the measurement was done. So this is very important. So it's not typical impact measurement with the huge partners and local partners. So it's done by students, but it's worth it. So it's no problem at all. So we have seen in our impact measurements in the first ones, okay, just 3 villages, we have seen a reduction of waterborne diseases by 80%. We have seen more education, more educated children by 60%. But this is something we have to figure out again and on every village or in every project again. So this is something you have to gain and to develop, to adapt and develop further. So we are in a phase to adapt actually every year or every half of a year. So part of my team is right now in a course just about impact measurement, just a half year course, for example. So impact measurement, yes, important, but don't spend too much money on the beginning, although it's crucial for your business. Try to universities, students, to do a little bit of the impact measurement so you can show figures. At the end, impact measurement is important, but at the end, it is like it is. For investors, even for philanthropic investors and even for impact investors, the business numbers business figures are actually the crucial part. So impact, great, nice, but you have to show them that your business will work on for the next years.
Sure, these are the two requirements, right?
Mhm.
Thank you so much, Martin. I'd like to take some questions from Luisa. Luisa, I see that there are some questions that came out. Can you maybe unmute yourself and let us know?
Laura, first of all, thank you. It was fascinating. I think we are running a little bit behind time, but you know, I would say that we take some questions for 10 or 15 minutes if people.
That would be great.
I would just like first, because I'm really happy that you started with the questions on impact measurements, because really there were several that we received also in the Q&A, and I would just like to call the attention for those alumni present that we just started an online training course on IMM. So there's still an opportunity for the alumni of the SIT to enroll if you want. And I'm really happy that Martin said how important it is. And one point that I would just like to make is sometimes the social entrepreneurs think that, you know, impact measurement has to be an evaluation study. You already collect a lot of data that you can use already for your dialogue with the impact investors. So you really have to adapt to the stage you are and the questions you want to answer. And some of the data that you gather from your daily business can be used already for a dialogue with the entrepreneur. Mm-hmm. So I'm going to take one of the first questions that was not related to the IMM, and is, you know, they're both related to how to find investors and where to find them, how long does it take, and how many touch points normally we need to have a verbal yes. So Laura, I think this is for you.
Sure, I think we already talked a bit about how to find them. I think it depends a lot. It requires research for sure. It requires you a good understanding of the market. So like Martin was saying, you need to either dedicate part of your time to that as a co-founder or one of your staff members for this research, or you externalize it to someone who actually has the knowledge of the market. But it's important to really think of the type of investor that would be fit for your stage of enterprise, for your sector, for your geography, and also for the type of engagement that you would look for. So if you're early stage and looking for an active investor, it's one kind of profile. If you're looking just for capital and not much support, if you're looking for an investor that you know, would have the potential to come up and support you in upcoming rounds, this is really important to think of all the details well in advance. So yeah, I think that's more about how to map them. As I mentioned, don't go for a one-size-fits-all approach. Try to build very early the relationships with investors, a limited number, but high-quality investors. And what we often advise is don't wait until you need the money to go and reach out to the investors. Build the relationships early without making a sales speech, without selling your project. Just, you know, in very informal conversations, tell them what you do, make them fall in love with your ideas. And then once that relationship and trust is there, when you will need the money, it's going to be much easier to go and have conversations with them. So really think of it as an ongoing type of work that you do. That's the ideal scenario, in particular in the first stages, when this kind of investors might be closer to you through events and stuff like this. In terms of the timing, as I mentioned, it's difficult to say. We estimate between 6 and 9 months, but it depends from the moment you start the reach out to the investors, but it really depends on the investment process that they follow. If it's quick decision making because it's an individual, or if it's an impact fund with an investment committee that meets twice a year, right? It changes completely. Mm-hmm. I don't know, Martin, if you want to add anything.
Completely with you. Just do planning how long it takes. You need the money for this time during the investment round. So it's really bad if at the end of the investment round, when you're in negotiations, your cash you run out of cash. This is really a pity, actually. And if you do a proper planning at the beginning, just add 2 or 3 months, because it needs longer than you expect every time. Mm-hmm.
Totally. Thank you so much for adding this.
Okay, Laura, you make it sound very, very easy to find investors. There's some questions from social entrepreneurs that say, even though we have great projects, how do we attract them? I know that you've said we should start trying to attract them from the beginning, but now tell us, how do we attract them? What is your strategy? Or what can you advise the entrepreneurs to attract? I also have some thoughts, but I'll let you.
Great question. I think if it's a great project and the investors don't find it a great project, probably you have not identified the right investors for your project. You didn't do the research properly. Because assuming it's really a very, innovative and also, let's say, a project with a good financial potential, then it's just a matter of identifying the investors that have those preferences. So that are looking for investing in that specific sector, in that specific region, with specific, let's say, requirements in terms of the type of financial instrument, right? So I think it's a matter of doing the research properly. That would be my answer. Martin, how about you?
This and no, very early stage. Just have a look on events, on startup conferences, on even grant opportunities, awards, mainly awards, so you can test out your business case a little bit. There are almost all the investors involved in this kind of events or grants or awards, and pitch there, pitch, and then you can receive a lot of input from investors as well. And if you see, investors are attracted, you're on the right way.
Actually, a point on this, because I didn't mention it and it's crucial. We talked about the importance of remaining open to feedback, remaining open to, just like in the beginning, but also across the journey of your enterprise, always be with the ears wide open. If an investor says no, and you think it's a great business idea and impact model, and they say no, ask them why. If the answer is, well, it doesn't fit my investment strategy, then obviously you didn't do a good research. If the investor says, well, because I don't believe that this assumption or that this impact measured in this way actually makes sense, then work on those. So make it a bilateral, an exchange. Don't just go for a yes or no. Ask why. Why is it a no? And try to act on that.
But look for different opinions. So there are some investors, they say that's no business actually, so stop it right now, and they are not right. So ask several different opinions, investors, for their feedback. And as you said, very important, take the impact, adapt your business model. You have to adapt it almost all the time. So we are adapting our business model right now, and we are 10 years on age right now.
Lisa, I think we have time maybe for one final question. Lisa?
Yes, can you hear me?
Yes.
Yeah.
Okay, because I'm having problems with on this side. Anyway, I think that Martin had a great point in terms of attracting the attention. There's a lot of programs out there. I will take the opportunity to make some publicity for the social innovation tournament that we run. There are many other competitions at the early stage, and this is an opportunity to belong to a network and then to have access to investors. Sometimes it's not just the prizes, it's to get into a networking cycle, it's to be out of your silo, work, meet other entrepreneurs, and then, they will always have an investor that they know they can introduce you to. Because in fact, investors are also so overloaded on their side that sometimes they don't even do the bridge with entrepreneurs. We always hear entrepreneurs saying that there are no investors, and the investors saying there are no good projects. And one of the things that we do try to do with our alumni is really to bridge this gap between entrepreneurs and investors. Yeah. So I'm going to give you a final question. I'm going to give you two because I think both are important. One is, how much is the importance of the public-private collaboration to raise impact investment? And the second one is, how do you address the question of follow-on financing and exits? So if you could just briefly answer these two questions, then we could wrap up for the day.
Let's try then very briefly. For the public-private partnership, I would say it really depends on your business model. Depending on your strategy, on how you reach your customers, on you know, whether the services or products that you're offering are part of the mission or sort of, you know, like, yeah, the mission of a government service, then obviously that becomes very important. If your strategy focuses on just reaching out to customers on the private market, maybe it's less important. So it's really, it needs to be designed based on your own case. And then in terms of the follow-on investment question, I would say what I would suggest the first step is discuss with your current shareholders. They might be the first ones that want to, you know, add more money and support you further if they like what you do, if they believe in what you do. If they don't want to do that, also ask them why. Is it because of their financial situation, or is it because they think that you're doing something wrong? And if so, ask them what is it that they don't agree with. Because that might come back as a question from additional future investors. And I think very important as well is to ask them as well as the board. Usually at that stage, if you're growing, you have an additional board of directors or advisors. Ask them to open their doors. I think that's the second easiest way through which you can tackle the follow-on investment scenario. Get them to introduce your enterprise because they are the closest and the best ambassadors for your enterprise. Martin.
I'm pretty with you. So the first one, public-private partnership, it should fit on your business case, of course. So it's not a fit for every business case. I think it will come up more and more. For example, social impact bonds. I hope so that they will come more and more. But they are, of course, for interest, because especially social enterprises are solving many problems which are actually the problem of a government or can be a problem of a government. So public-private partnerships are great if they fit to your business model. And the second thing, I'm with you, Laura, you have to discuss it with your partners. So if you have already investors in your company, they are part of your company, so they are your partners, and you have to discuss it with them. But as long as you present them a clear strategy based on impact, of course, but on business plan, on a business case, they will go with you, actually. They should.
Well, Luisa, I think we will need to stop here. We will need to have a stop of this session ultimately. Thank you so much, Martin, for joining us. I think you are in Vienna. Am I right?
Yes.
Thanks
at
so
home.
much.
Hopefully you as well.
It was great to learn from your experience. I hope that this session was helpful for everyone. We do still have and end the session with another technical difficulty, which is the fact that the poll that we created to get some feedback from you is not working for some reason. So please, before you leave, if possible, leave us a comment with something that you liked and something that we might improve in the next session. We would really appreciate that, and maybe we will try to come up also with a follow-up email with the slides as well as with a thank you note for all of you who listened so carefully for more than an hour now. Luisa, thank you to you and Denise for facilitating and helping us organize this session. For me personally, it was really, really interesting.
Great. Thank you so much.
Thank you, Laura. Thank you, Martin. And for those that are still with us, I would just like to remind you that at the end of the month, we'll have a webinar with Kim van Niekerken on mindfulness for social entrepreneurs. For those that have just read the article from the Harvard Business Review, you know how important it is to start your day with mindfulness. So I hope you join us. There will be some details on our social media, and you'll receive an email with the precise date and timing. Okay, thank you, and see you then hopefully for the next webinar, and stay safe.
Thank you so much.
We will wait 2 more minutes for people to leave their comments, but we can take off the video. We declare this session ended, and we wish you all a good lunch and hopefully a quick recovery from this stressful crisis situation. Have a good day, everyone. Bye.